Well, Christmas may be coming early. Market bulls are hopeful for an end-of-year rally. Despite a bit of a flat trade in stocks this morning, the market's moves on Friday sent all three majors to their highest close in nearly 2 months. A new report from Piper Sandler's technical research team names 6 high-conviction stocks that look attractive for investor portfolios right now. Let's bring in one of organizers behind that report. We've got Jason Glazer, Managing Director and Head of Product Management at Piper Sandler. Jason, this is always an interesting report. Before we have you break down those 6 stocks, walk me through how you got to that.
No, well, first of all, thank you for having me this morning. So, how did we get here? We continue to hear from investors in such a challenging and uncertain market is we want high conviction ideas. And how do you ferret that out? And what we did was combined our macro research, which consists of our portfolio strategy team's work and our technical analyst work with our stock analyst work. And if you look at the Piper Sandler universe, we cover almost 1,000 stocks and about 570 are overweighted or buy ratings. We take our portfolio strategies model, which is called Macro Select, and right now it's looking for high quality. We define high quality as stocks that have strong earnings growth, profitability, strong returns, as well as being low beta. And they screen up about 50 plus stocks that rank in their top decile from that universe of overweights. And then our technical analyst takes a look at the charts, and they get me about 15 to 20 stocks that make it through the 3 screens. And then I follow up with our stock analyst to make sure fundamentally that these are some of the highest conviction ideas. And that makes it easy to go out to investors and say, these are stocks we truly like, top down and bottom up.
And Jason, we're seeing a lot of tech companies on that list, but walk us through Lululemon being on that list. What makes them a standout here in this crowd of tech?
So Lulu stands out. Obviously, everyone knows the brand. It stands out because it has both high earnings growth and earnings expectations. And if you go into the business, they have pretty high margins, with about 45% of sales coming from company-owned stores and about 45% of sales coming through the e-commerce channel. They're tremendous at product innovation. They keep high, full price selling, unlike a lot of the discounting you see in the retail industry. And they also have some tremendous growth opportunities in China. So when you kind of break it down, it is attractive on the chart. It looks relatively strong compared to the retail group. And we think that the positives are going to continue to be a tailwind for Lulu here.
Well, let's talk about a name that investors are very familiar with, Amazon, among those top 6. Why does it make sense to get in at this price point?
No, fair question. We all know and use Amazon. I think one of the things to think about it is not only does it have strong earnings growth, but it's got earnings momentum. The AWS business, which had faced some challenges as you saw some cloud optimizations, i.e. some cost controls, we're starting to see that stabilize. And in fact, AI workloads are, if anything, likely to increase cloud business there. The core business, I think, has been doing well and has seen improving margins. And frankly, it's another one where the chart looks good. It's and again, we think relative strength, even to a strong tech group, it looks good to us. So we think the good news is going to continue for Amazon, both with the AWS, the core business, even a small business advertising. We think could ramp up to be as big as $50 billion.
And Jason, keeping an eye on biotech as well, I see Amgen on this list. How does it, when you compare it with its peers, what made it a standout to make your cut here?
Right. It's Amgen. I know biotech's had a tough go of it, although at least we got some good news from the GLP-1s over the weekend. But, Amgen is a highly profitable company, but it's also a low beta, which, in a backdrop of a market of uncertainty, you want to find stocks that are going to be low beta, lower volatility. It just completed, or it's completing its acquisition of Horizon Pharmaceuticals. They're going to layer in a tremendous drug, Tepezza, which we think on the Amgen sales force can show significant improvement. They've got 2 pipeline drugs in obesity, earlier stage, but we're going to get some data next year. So we think Amgen offers a lot of stability for investors, as well as offering growth in the future that may not be into the numbers and into the stock quite yet.
Finally, Jason, we've got to touch on the energy space. Coterra, one that you're watching closely. Sure, it's not what we saw in terms of the energy space last year, but what's particularly attractive about this name given the current environment?
No, absolutely. I mean, we definitely say just looking at the oil price, it feels like any, greater war theater in the Middle East is definitely not priced into oil right now. Whether that's right or wrong, we'll find out later. But for Coterra Energy, they are one of the absolute best operators in the Delaware Basin. They have a balance sheet that should be debt-free next year, which should have great implications for shareholder returns. They're also saving, at least a couple $100 million in the Marcellus and can deploy that in the very high return Delaware Basin. So we think Coterra, company specific, should be in tremendous shape. Again, relative to the group, it looks quite attractive here. That fits the screen of being high quality in this uncertain market.
Well, I appreciate you taking the time to break down those insights. Interesting report there. Jason Glazer, Managing Director and Head of Product Management at Piper Sandler. Great to have you on.
Thanks.